when the U.S. government has proposed and written into draft, and it will be accepted, that silver will become a critical mineral in this country. Things are changing, and I think what we saw was a desperate attempt by some really caught commercial banks that are massively short, and the rising price, coupled with a government shutdown and trade meetings with Xi and all sorts of stuff going on. You see the dollar index down. The dollar's down 7 or 8% this year against the dollar index. It was down 11. It's rallied a little bit, but it's down almost 70% in silver, even with this pullback, 65. So 60. So the point is, it's masked. The devaluation of the dollar is masked at looking at a basket of all the other brain dead crap currencies measured against something like gold or silver, and you see the real devaluation of the dollar. And this is a trend that will only accelerate.
Andy Schectman, a veteran in the precious metals industry, highlights a pivotal development that signals a major shift in U.S. monetary and industrial policy: the formal designation of silver as a critical mineral. He explains that this move underscores how the U.S. government is finally recognizing silver's strategic importance in both national security and the green energy economy. At the same time, Schectman points out that commercial banks heavily short silver have become increasingly desperate as the metal's price rises and the dollar quietly weakens behind global trade and political tensions. While mainstream metrics show only modest dollar declines, gold and silver reveal the true scale of devaluation. Schectman warns this trend is only beginning and will likely accelerate in the years ahead. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
Slight backwardation is reappearing between London and the U.S. again. So all the metal that got shipped from Shanghai at exorbitant lease rates and whatever 20 or 30 million ounces that got shipped from Comex over there to quell the problem. Well, what good did that do? There's still deliveries next month and the month after and the month after. And so the physical demand is overwhelming the paper price, and it's desperation when you come in the middle of the night and dump at a time that no one would do it. It was specifically done to cover shorts and for effect, and for the media to jump on and tell half the story without saying, by the way, some idiot dumped it when no one else ever would, to maximize the worst possible settlement they could ever get. And so that to me invalidates so much of what would otherwise be valid statements. And I think it goes to show where silver is ultimately going. When the U.S. government has proposed and written into draft, and it will be accepted, that silver will become a critical mineral in this country, things are changing. And I think what we saw was a desperate attempt by some really caught commercial banks that are massively short, and the rising price, coupled with a government shutdown and trade meetings with Xi and all sorts of stuff going on, the last thing, and interest rates going to be lowered again, the last thing they wanted is for metal to get way out of control, and this is their way to stop it. But what am I concerned about? I'm concerned about tough times. I'm concerned about inflation and half-empty shelves, that until we are able to get our fiscal house in order and start manufacturing again, I think that unfortunately that there will be a couple of years of difficult times, but I think there is reason for optimism if we are able to pull this off. At this point, what choice do we have? We can inflate, we can default, or we can try and grow our way out of the problem. And the only way you grow your way out ever is to bring back manufacturing and to give up on being the reserve currency. You look at all the BRICS nations, they're all talking about trading their local currencies and settling imbalances in gold. You don't see a common currency. You don't see a replacement for the dollar. Everyone used their currency, and gold is finding a common denominator that is trust within the system, whether it be in the Southern Hemisphere or up here in the United States. But something needs to change, and I'm concerned that if it doesn't, things are only going to accelerate in terms of our indebtedness and the effects that ultimately that will have on the reserve currency. Because at some point, a currency that's based on trust that has lost a good deal of trust in weaponizing the treasury market, in sanctions, in tariffs that are actually sanctions that are masquerading as tariffs, and fiscal and monetary irresponsibility, the rubber meets the road at some point. So concerned that, tough times ahead, and the only way that you get out of this alive is to have assets. That is how you win. And the biggest, most well-informed money in the world, know this, and that's why we're seeing billions and billions and billions and billions of dollars every month come into Comex. So you know what? Get your own financial house in order and start accumulating assets. You save in dollars, you're going to go broke. One last point to that. You see the dollar index down. The dollar's down 7 or 8% this year against the dollar index. It was down 11. It's rallied a little bit, but it's down almost 70% in silver, even with this pullback, 65. So 60. So the point is, it's masked. The devaluation of the dollar is masked at looking at a basket of all the other brain dead crap currencies measured against something like gold or silver, and you see the real devaluation of the dollar. And this is a trend that will only accelerate.
Andy Schectman explains that a quiet but critical shift is unfolding beneath the surface of the metals market. Signs of backwardation between London and the US are reappearing, exposing severe physical tightness despite paper price suppression. Shipments of silver from Comex to Shanghai have failed to solve the shortage, a signal that physical demand is overwhelming the paper system. Schectman argues that recent midnight sell-offs were deliberate, designed to mask desperation among the major short players. With silver now set to be classified as a U.S. critical mineral, he warns that this manipulation may soon backfire as the dollar continues to weaken and confidence erodes globally. The path forward, he says, lies in owning tangible assets before this financial reckoning accelerates. Let's get into the interview.
I was talking about all the deliveries that were coming off of Comex. It was very unusual starting in 2020 because no one ever stood for delivery. The exploitation of the delivery option in London and the US is something that was rarely exploited. And now it's being exploited not only by all of the BRICS nations and Russia and China and India and Saudi Arabia and all of the countries that are standing for delivery on all of the world's commodities, but there's someone got to President Trump, in my opinion, and said, if we don't do this, we're dead. We're dead because they're draining the shelves across the globe. And so they phrase it as tariffs and they start bringing it back. It's not tariffs, it's reshoring. All the gold and silver, billions and billions and billions and billions and billions of dollars worth of metal. So far this month, which is a non-delivery month in silver, just shy of 8,000 contracts have stood for delivery already at 5,000 ounces apiece. So do the math. I mean, it's not a delivery month, but it's still an awful lot of silver.
Yeah, it's a lot.
And yes, it is harder because if in a game that is just cash settled amongst coordinated players across the globe, it's easy to suppress the price. But when all of a sudden you are being challenged not only by central banks and sovereign wealth funds across the globe, but now a large, what appears to be entity here in the United States who are literally bringing in billions of dollars a month in silver onto Comex, something's different. And you can only manipulate a market over time by pushing the direction it's going. And it was easy to do that for a long time. The fact that they are standing for delivery slowly, not so fast to break the system like we're close to seeing in London, but slow enough to bleed it all dry. And that's why I would argue that some of the metal flowed back there reluctantly, because this is how they have been bleeding down the system for the last 5 years by slowly off-taking as much as they could out of London. And that's why London has the lowest float that they've had basically ever since they started keeping records, about 140 or 50 million ounces against 600 million ounces a day in trading. So what could possibly go wrong? And so they are standing for delivery. This is showing the cracks, and that's why we had $3 an ounce backwardation for a while, where the physical metal right now today is worth more than the futures price, and that's very rare in the commodity complex. After the last 4 years of policy that was too stupid to be stupid, we've now entered a period of time where I think it's all about an acceleration in a new system that's coming. So I'm concerned that we have hard times ahead of us. And I think what President Trump is trying to do, if there's any nobility in it, is to massively debase the dollar, to devalue it, to ultimately bring back manufacturing and to relinquish, according to Triffin's dilemma, relinquish the reserve standard. If we are the reserve currency, we will never have a manufacturing base. We will always run trade imbalances. I believe they want to get rid of the world reserve currency. They want to bring back manufacturing. And if Judy Shelton is right, and they peg gold to the back end of the Treasury market next July, you can bring back with a 20, 30, and 50-year treasury redeemable in gold with zero coupon, no interest in 20 or 30 and 50 years, you can bring back manufacturing immediately with no upfront borrowing costs. And with the passage of the Stablecoin Act, the Genius Act, you look into it and you see that every time money moves, stablecoins will be created. And the interest, because they're backed by US treasuries, the interest that is generated is not transferable. Tether, as an example, USA Tether, by the way, their CEO is Bo Hines, the guy that was Trump's crypto advisor until August. He's now backing US, or the CEO of USA Tether, which is already stablecoin, or excuse me, Genius Act compliant. They will back everything with treasuries, which creates synthetic demand for the treasury, pushes rates down, but they will take the excess, the interest between the stablecoin and the treasury, and they'll buy gold. And I think they'll buy Bitcoin, and they'll buy gold to make it go much higher. They already have over 8 billion worth. They were just at the Beaver Creek Mining Summit. They're going to continue to buy gold to devalue the dollar and to ultimately peg the back end of the treasury market to bring back manufacturing, because we need to. Our children and our grandchildren are dead otherwise with illiteracy and uneducated masses and a massive spread between the haves and the have-nots and no manufacturing base and massively indebted. We need to do this no matter what. And I think they will do that through devaluing the dollar massively by letting gold go higher. I think they'll let Bitcoin go higher and use it to pay off the debt. This isn't conspiracy. Read the executive order that next year they're talking about revaluing gold as part of the Bitcoin fund that Senator Lummis from Wyoming has been advocating for. And if they do revalue it, it devalues the dollar. It's not about revaluing gold. It's about devaluing the dollar to a much lower level so we can sell our products to the world. You have to bring back manufacturing. How do you do that?
Andy Schectman paints a dramatic picture of a financial system reaching its breaking point, one where the delivery mechanism on the Comex has quietly become the center of a global power struggle. He describes how sovereign wealth funds, BRICS nations, and even U.S. entities are now demanding physical delivery, draining inventories in London and exposing structural weakness in the paper, gold, and silver markets. Schectman believes this movement is part of a larger strategic de-dollarization, one that may include deliberately devaluing the U.S. dollar to revive manufacturing and end the Triffin dilemma. If plans to revalue gold and peg it to long-term treasuries take hold, it could mark the dawn of a radically new monetary era, where America trades its financial dominance for industrial survival. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.